You look at the architect of a 65 billion euro defense Leviathan, and you assume ownership. You assume Armin Paperger controls Rheinmetall because, well, he holds the equity. You think he built a family dynasty of steel and gunpowder? He hasn't. The man holds roughly 1 million euros in stock.
Which is, I mean, that is nothing at that scale. Rheinmetall has a 100% free float. The entities actually holding the equity are institutional giants: BlackRock, Vanguard, Fidelity. Papercard is not a capitalist owner protecting a family legacy.
He is a sovereign operator directing global liquidity.
We are pulling from financial filings, European defense directives, and recent Q1 2026 data for this deep dive to figure out who's actually holding the bag for Europe's rearmament.
Name the cognitive trap we are dealing with here.
Call it the crisis profiteer trap. You look at a map of Europe, you see an active ground war, and you conclude that defense contractors generate power simply by selling weapons during a geopolitical crisis. You think the transaction itself is the source of the authority.
The transaction is just a symptom. Framing this as mere war profiteering is dangerously incomplete. These entities do not generate power by simply moving metal from a factory to a front line.
They generate power by monopolizing the unavoidable bottlenecks of warfare.
And then offloading the physical and financial ruin onto sovereign taxpayers. What happens when the architect of Europe's security is forced to deliver on 63.8 billion euros of promises he might not have the physical capacity to build?
Look at the physical deployments on the ground. The official map of Paperger's strategy looks like a portrait of extreme wartime risk appetite. Paperger announced Rheinmetall is building 4 weapons factories directly in Ukraine,
Producing artillery shells, Lynx infantry fighting vehicles, gunpowdering.
Anomaly and air defense systems, which fundamentally changes the threat profile. The danger is not abstract. In July 2024, U.S. and German intelligence and the CIA and the BND thwarted a Russian assassination plot targeting Paperger himself. Left-wing radicals torched his property in Germany in April 2024. The narrative presented to the public is a CEO putting everything on the line,
Accepting immense personal and corporate danger for wartime expansion.
That narrative requires us to ignore the financial load-bearing assumption beneath the concrete of those factories. You have to ask who is actually holding the bag if a Russian cruise missile hits one of those Ukrainian facilities.
The capital expenditure isn't coming from his own pocket.
Where is it coming from to build a factory in an active war zone? No institutional investor allows a CEO with a 100% free float to gamble corporate capital under artillery fire without an ironclad insurance policy.
Let us clarify the mechanics of a 100% free float. It means no single founder or family owns enough shares to dictate terms. The company is entirely owned by public shareholders.
Paperger answers to transnational funds.
The insurance policy he secured to placate those funds is the state itself. The mechanism underneath the bravado is state-sponsored production.
Take the first batch of Lynx infantry fighting vehicles destined for Ukraine. That initial production of 5 units was entirely financed by the German federal budget. Paperger publicly initiates the demand. He captures the strategic monopoly.
He dominates the public relations cycle as the savior of European security.
The actual financial risk is absorbed entirely by the German taxpayer. If you are paying taxes in the European Union, currently, you are the insurance policy for these factories. You are underwriting the risk.
He secures the demand publicly, but the capital expenditure only flows when sovereign guarantees are signed by the government. Capital doesn't fight wars. It builds the toll booth on the road to the battlefield.
Building toll booths requires someone handing you the keys to the highway. Paperger didn't just walk into this position. The state doesn't just hand over a blank check and a monopoly to anyone. He had to engineer that structural trust.
And he engineered it through a purge. Look at the corporate history of the company. In the early 2000s and 2010s, Rheinmetall subsidiaries like STN Atlas were embroiled in massive bribery scandals involving defense contracts in Greece and India.
Millions in bribes were paid for air defense systems and howitzers. The legal fallout was immense, resulting in heavy fines.
A standard corporate crisis. Most companies pay the fine, replace a few board members, and continue operations. Paperger used the crisis of legitimacy to centralize authority.
He wasn't personally implicated in those specific bribes, but he became the sole beneficiary of the fallout.
He instituted a draconian compliance management system. He purged the old guard of regional managers who previously held localized power. By writing all financial auditing directly to himself and reducing his management board to just 3 people, he transformed a sprawling, decentralized conglomerate into a personal autocracy.
He dismantled the internal checks and balances under the guise of increasing transparency. In 2021, before the war in Ukraine even started, he executed a structural amputation.
He dismantled KSPG, Rheinmetall's legacy civilian automotive division.
He forced a 100% pivot to defense, anticipating the geopolitical shift before the capital markets even registered the impending threat.
Anticipating the threat doesn't explain the funding mechanism. Look at the institutional money flowing into Rheinmetall now. BlackRock and Vanguard hold roughly 11% combined.
The mainstream explanation for this capital influx relies on pure causality. The 2022 invasion of Ukraine made European defense an absolute necessity, which naturally attracted institutional investment. The war started, the need arose, the money followed.
The timeline breaks that explanation. Before the war, the European defense industry was practically blacklisted by ESG funds. Environmental, social, and governance compliance taxonomies treated weapons manufacturers as toxic assets.
They actively blocked access to sustainable financing.
A military invasion does not legally rewrite European Union financial compliance taxonomy overnight. Bureaucracy does not dissolve because a tank crosses a border.
A tank crossing a border creates panic in the press. It doesn't change the legal framework of a trillion-dollar pension fund in Frankfurt. The blockade was still there. Explain how the money legally bypassed it.
The money bypassed the blockade through institutional engineering. Paprika didn't wait for the European Union to slowly adjust its rules. Operating as the president of the BDSV, the German Defense Association, he hijacked the normative narrative.
He lobbied the EU with a newly engineered ideology. Security is the fundamental prerequisite for sustainability.
He framed defense not as a destructive force, but as the ultimate ESG requirement. He turned the production of high-explosive artillery into a prerequisite for human rights. He held meetings with EU commissioners, shaping directives like ASAP and EDIRPA.
These are the very frameworks dictating how European defense funds are distributed. Once that narrative unlocked the institutional capital, he didn't just scale up shell production. In 2023, he bought Expal systems in Spain.
In April 2025, he bought Hagedorn-NC.
Buying a Spanish munitions maker is standard corporate consolidation. Buying Hagedorn-NC is something else entirely. Hagedorn-NC reveals the actual endgame.
Europe relied heavily on Chinese cotton linters to synthesize nitrocellulose. That is the critical ingredient for artillery gunpowder. By buying Hagedorn-NC, a German producer of industrial nitrocellulose, Paprika seized the chemical bottleneck of the entire continent.
Even if rival defense companies win a government contract to manufacture 155mm shells, they cannot fulfill that contract without buying the propellant from Rheinmetall.
He didn't just expand a business, he engineered a chemical monopoly. He thinks in terms of vulnerabilities in supply chains, not just finished products.
The chemical monopoly in Europe is only half the board. Look at the geographic expansion targeting the United States. In December 2024, Rheinmetall dropped $950 million to acquire Lock Performance in Michigan.
He's buying American manufacturing nodes, positioning himself for the XM30 and CTT military programs. Then, in May 2025, he signs a joint venture with Lockheed Martin to build Europe's first factory for HSCMS, GMLRS, and Patriot missiles.
He's hedging against, well, American isolationism. By nominating figures like Sigmar Gabriel, former German vice chancellor and head of the Atlantic Brücke to the supervisory board, he's building a political shield.
If a populist government in Washington decides to pull the military umbrella back from Europe, Paprika has already embedded Rheinmetall into the core of the U.S. defense supply chain while simultaneously locking down the European production of America's most critical missile systems. He ensures that whatever the Pentagon decides to do, they have to pay a toll to Rheinmetall.
Rheinmetall appears to be mastering the future of mechanized combat. The expansion is aggressive and structural. Paprika formed the LRMV joint venture with Italy's Leonardo. This was a direct strike aimed at breaking the Franco-German KNDS monopoly on tank production.
He captured a potential €50 billion pipeline for the modernization of the Italian army over the next 15 years, pushing the Panther KF-51 tank and the Lynx vehicles. The map shows a corporate empire dictating the next decade of European heavy armor.
The map contains a jarring anomaly that threatens your entire structural logic. March 2026, an interview in The Atlantic. Paprika publicly mocks Ukrainian FPV drone production. He calls it a Lego game for housewives with 3D printers.
He contrasts this with what he calls real technologies built by defense primes.
He is building an 80 billion euro empire and gets outmaneuvered in the press by a Lego analogy. This triggered a massive diplomatic and PR backlash from President Zelensky, the Ukrainian defense sector, and the European press. The hashtag made by housewives went viral.
Defense tech founders, like Florian Seibel of Quantum Systems, publicly condemned him. The company was forced to issue a corporate apology on X to contain the damage.
We diagnose this not as a momentary lapse in judgment or mere arrogance. We diagnose it as an existential defense mechanism.
You are painting him as a mastermind who secures American missile lines and European chemical monopolies. The data says he is showing profound institutional blindness to the exact technology that is destroying heavy armor on the battlefield every single day. Why does the ultimate defense strategist ignore a $500 drone?
Acknowledging it destroys his reality. Paprika's power relies entirely on multi-million euro heavy platforms. The entire Rheinmetall margin architecture is built on selling 10 million euro tanks and Boxer vehicles.
A $500 decentralized drone neutralizing a 10 million euro tank breaks his financial model. Acknowledging agile, cheap, decentralized technology means acknowledging the impending obsolescence of the massive, heavy defense budgets his empire feeds on. Institutional blindness is rarely an accident of intellect. It is a defense mechanism for a dying profit margin.
Force a hard look at the data from the first quarter of 2026. This is where your narrative of invincibility fractures. We see a collision between execution risk and ceasefire risk. Rheinmetall missed Wall Street earnings estimates, shares dropped 7%, and JP Morgan downgraded the stock to neutral.
The company boasts a 63.8 billion euro backlog and 10 new joint ventures, ranging from satellites with ICY to maritime tech, yet they recorded a negative 285 million euro free cash flow in early 2026.
The physical reality of pouring concrete and sourcing steel cannot match the speed of their public relations. The gap in the data is simple. They cannot physically build what they have sold fast enough. They are structurally overextended due to aggressive stockpiling.
The financial markets are terrified of a ceasefire. If the war in Eastern Europe freezes, the immediate demand for stockpiled munitions drops. The unresolved question hanging over this entire structure is the patience of the transnational capital. Do the institutional investors, BlackRock and Vanguard, have a backroom tolerance to absorb these cash flow deficits while Paprika attempts to physically manifest these factories?
His personal compensation, capped at 10.5 million euros, is tied heavily to short-term and long-term stock performance. If the capital markets lose faith in the timeline of the war, his leverage evaporates. Will those funds dump the stock at the first sign of peace, collapsing a CEO who relies entirely on free-float capital?
The data does not tell us if Paprika's tenure can survive the end of a hot war. We are staring at a structural vulnerability that neither the state nor the CEO can easily catch. Stop looking at Rheinmetall as a factory that makes weapons to win a conflict. The conflict is merely the liquidity event.
The actual product being manufactured is the permanent integration of private corporate bottlenecks into sovereign European survival. We keep asking if Europe's defense industry can outlast the conflict, when the mechanisms they have built guarantee they're the only ones who can afford the peace.